Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. And over the next 1 hour, we'll talk about everything that's been happening in the global markets, all the cues that you need to watch out for domestic markets, and all the stocks that you must keep on your radar today. So let's get started with an eye on the globe and see how Wall Street fared yesterday. And it was a rather negative day for the US markets. They closed lower in the latest session, extending recent weakness. This as investors continue to trim exposure to big-ticket technology and artificial intelligence plays. Now, the S&P 500 and the Dow Jones Industrial Average, they notched their fourth straight day of losses, while the Nasdaq Composite, that was the worst performer, sliding nearly 2%. That selling pressure was concentrated in semiconductors and data center-linked names, this amid growing concerns over high capital spending costs. Now, during the regular trading, Oracle fell more than 5% after a report said that primary investor has pulled out of a planned $10 billion data center project in Michigan. Now, that news rippled through the chip sector, with Broadcom down about 4.5%, whereas Nvidia and AMD, they also declined. However, after the bell, sentiment did improve a little bit. Shares of Micron Technology, they jumped more than 7% in extended trading after the company's it beat expectations on both revenue as well as the profit front for the fiscal first quarter and delivered a strong outlook as well going forward. Now, looking ahead, the street is focused on November's U.S. Consumer Price Index data due Thursday, that is later today. It will be the first inflation report released since the government shutdown ended. This with economists expecting headline inflation to come in at 3.1% year-on-year. Now, despite the recent pullback and rotation away from tech, the sector remains a standout performer and is on still track to finish 2025 roughly about 19% higher. So yes, that's about the markets as the Wall Street Fed, a rather negative day for the Wall Street. But let's also take a look at what's happening in the commodity markets. And oil, that has actually extended its gains as geopolitical risks, they continue to mount. If you talk about WTI, that climbed more than 1% to that $57 per barrel level. Now, if you talk about Brent crude, that is also seeing gains of more than 1%, in fact 1.5%, pushing past that $60 per barrel mark. Now, crude prices, remember, they're extending their rebound from the 5-year lows. Earlier in the week, they did touch that 2021 low, and now they're recovering from those levels, trading in the green. Now, let's also see what's happening with the yellow metal and gold. That continues to be near its record highs yet again, holding above that $4,340 an ounce mark. So, yes, slightly negative day coming in for gold for now, down about 0.3%. However, holding on to that $43.40 ounce mark. So yes, a good day for a fairly good day for gold as well. Now, if we talk about silver, silver has notched another record high. It has surged more than 4%. So yes, good day coming for all of the precious metals, both gold and silver. They continue to be near record highs. So yes, that's about some of the commodity updates. But now let's get started and tell you about some of the top global stories that we are tracking this morning. And first up, like I said, it's on oil. Now, oil prices have jumped over 1%. And why? Because Trump has remained firm on his total and complete blockade of sanctioned oil tankers entering and leaving Venezuela. Now, this move sharply escalates pressure on Nicolas Maduro and raises fresh legal questions over enforcement and revives fears of tighter global crude supplies amid uncertainty over how Washington will implement this blockade. Adding to the pressure, Putin has signaled that clearly he has no intention of easing his demands for Ukraine to surrender territory, even as US President Donald Trump steps up efforts to broker peace. Moving on, the US Senate has passed a sweeping $900 billion defense bill, which goes to the White House for Trump's signature now. The legislation boosts military pay, limits troop cuts in Europe, and includes fresh funding for Ukraine and Baltics, signaling strong bipartisan backing for NATO and the US commitments, even as some provisions cut against Trump's stated positions. Moving on, another update from the world of defense. Now, European defense stocks, they rallied as German lawmakers, they've moved closer to approving a roughly $60 billion defense spending package. Now, investors are betting on fresh orders for equipment, vehicles and missile systems, reinforcing a powerful rally already driven by NATO commitments and record backlogs across Europe's defense industry. All right, moving on. Let's get you the latest on what's happening as far as the markets are concerned. Now, Oracle shares, like I said earlier, they declined about 5% after reports that Blue Owl Capital pulled out of funding a $10 billion Michigan data center for OpenAI. While Oracle says the project remains on schedule, investors' nerves are rising over AI-driven data center debt, private equity funding structures, and long-term lease commitments. That's across the hyperscale space. Next up, now India and Oman they're all set to sign the trade agreement during Prime Minister Modi's visit to Muscat. Now, the deal is being positioned as a key pillar of India's expanding economic and strategic engagement with the Gulf. Now, this even as its immediate trade upside remains measured by the size of Oman's market. My colleague Sumita Karir is here with all of the details on this front.
That's right. India and Oman are all set to sign the CEPA agreement today. That's the trade deal that both the countries have been negotiating. Remember, this is happening even as the Prime Minister is in Oman. He arrived in Oman last evening and he's on a three-nation visit to Jordan, Ethiopia and Oman. This is, remember, is the last leg of his visit. And remember, as far as this particular FTA is concerned, both the nations started negotiations on the CEPA agreement in November 2023 and they got concluded after 5 rounds earlier this year. In fact, Commerce Minister Piyush Goyal is also in Oman. He was addressing a business conclave yesterday, a business gathering as well. And of course, he was speaking about the kind of synergies that both the countries can draw as far as this particular FTA is concerned. So this is going to lead to trade liberalization, services, of course, exchange and investment opportunities as well. India will get access to 98% of its products in Oman, and there will be significant access in services as well. But if we look at India-Oman trade, well, this is the third largest export destination as far as Gulf Cooperation Council or GCC countries are concerned. The bilateral trade between Oman and India, that stood at $10.6 billion. India's key imports are petroleum products, urea, propylene, ethylene polymers, pet coke, gypsum, chemicals, iron and steel, while the key exports that India exports to Oman include mineral fuels, chemicals, precious metals, iron and steel, cereals, boats, electrical machinery and tea. In fact, the Commerce Minister, while speaking about this particular FTA, he said that his team worked very hard for 2 years on the FTA, and this FTA brings in opportunities in several sectors. That includes textiles, footwear, gems, agrochemicals, renewables, auto components, tourism and healthcare as well. And not only will this mean increased collaboration and cooperation between Oman and India, but this FTA also opens a gateway to the GCC region as well. Now, as far as the FTA signing is concerned, remember, this is India's calibrated strategy to de-risk itself from depending on any one geography. So this is one FTA that's going to get signed today. There are other FTAs that are currently in the works. The India-EU FTA, there is a review of ASEAN deal that's going on. The New Zealand FTA is in final stages. The EA-EU FTA talks are on. And of course, we are in talks with the US for a package deal, and those talks are moving towards closure.
All right, thank you, Sumita, for getting us all of those details. Now to take a look at how the Asia-Pacific markets have opened up, and it's a rather negative day coming in. Yet another day of red for the Asian markets. The sea of red, China's Shanghai index, that continues to trade in the red, absolutely flat, but yes, trading with a tinge of red. 3,867 is the level where it's at. Hong Kong's Hang Seng Index, that's also trading in the red, 0.6% downtick over there. 25,300 is the level that it has managed to hold on to. However, that negative territory, that continues to be hanging over Hang Seng as well. If you talk about Japan's Nikkei Index, that's trading more than 1% lower, 48,939. That's the level that it's holding on to. So yes, negative day of trade coming for Japan's Nikkei as well. Now, if you look at ASX 200, Australia's index, that's also trading in the red right now. 2% lower is where the index is trading, 85,068. That's the level that it's holding on to. If we talk about South Korea's Kospi Index, that's also trading more than 1% lower, 1.25% lower to be precise. 4,000, however, that's the level that it has managed to hold on to. So yes, that's about the Asian indices. Sea of red for the Asia-Pacific indices. Nifty also managed to close just above that 25,800 mark. But yes, Today as well, tracking all of those global cues, we are expecting a start in the red. 35 points of downtick at the start is what the Nifty implied open suggests for the Nifty today. So yes, that's how we are expected to open on a negative note. But Snehi, before we get more cues, which are the stocks that we need to watch out for, Snehi is here with us to take us through the entire market roundup action that we had yesterday. Snehi, we just managed to hold on to that 25,800 level.
Well, yes, another somber day of trade for the market. The Nifty ended with cuts of about 0.1% to 0.2%. 25,818 is where the Nifty shut shop. Yes, above the 25,800 mark, but still slightly pressured. Similar cuts seen on both the Sensex and Nifty Bank as well, but the broader end of the market was much more tepid, with cuts about 0.5% on the Nifty mid cap and about 0.7% lower is where the Nifty small cap index shut shop. Shifting focus back to the large caps, if you take a look at the Nifty 50 group of stocks, Shriram Finance, the top winner, on the back of the news from sources that MUFG may be mulling a 20% stake in the company. And other than that, the fundraising that they've announced on the 19th of this month kept the stock afloat. SBI, Hindalco, Eicher Motors, Tata Consumer, Coal India, these were some of the top Nifty gainers. On the flip side, Max Health, steep cuts coming in, a 4% drop on this stock. Apollo Hospitals, Trend, HDFC Life, SBI Life, Bajaj Auto. So it's some of these autos, private banks, as well as the health and life insurance counters that have not done well and dropped on the back of that insurance amendment bill announcement that now lets FDI to the tune of 100% come into the market compared to 74% earlier. Let's talk about the sectoral gainers and losers. Then it was the day of the PSU banks with Canara Bank, PNB, Bank of Baroda all shining bright and doing well. This was followed by Nifty IT, wherein names like Wipro, LTI, Mindtree, Infosys did well. Then you had metals, pharma and metals that did well. Pharma Energy on the flat line and steep slight cuts on Nifty Bank, Auto, which got steeper with FMCG, Financial Services, Realty, and Nifty Media was the top sectoral loser. And Nifty Realty was also down 0.8%, led lower by a 2.5% cut in Anantraj, Sobha, DLF, Prestige, Lodha. All of these stocks were in the red. From the broader end of the market, let's talk about Misho, a 20% upper circuit on the stock on the back of a UBS buy initiation call coming in. That stock did well. India Cements was up about 8%. IGL on the back of a very bullish brokerage note did well. But on the flip side, immense pressure on Axo Nobel, a 14% cut coming in on that stock on the back of a block deal wherein almost 49 lakh shares changed hands. So these were the market, these are some of the stocks that stood out and the ones that we wish to highlight. But yes, other than that, it was a day of somber trade for the market. Let's see how the BSE Sensex expiry pans out for the market.
All right, so yet another somber day of trade for the markets, and that's what we are expecting today as well. But there still could be some stocks which are going to be on the move, and Ravinder is here with a list of all of those stocks. Ravinder, good morning. Which are the stocks that you're tracking this morning?
Well, yes, good morning, Kanishka. KPI Green Energy can be in focus, where KP Group has signed a MOU worth rupees 36,000 crore with government of Botswana, and KP Group will develop nearly 5 gigawatt of renewable energy storage and transmission infrastructure to support the nation 2030 net zero goal. So, back of this MOU, this stock can be in focus. Moving to next, Indian Overseas Bank can be in focus, where DPAM secretary says that the OFS has received a good response from the non-retail investors, and government has decided to exercise the green shoe option. Government to sell up to 3% stake with 2% base and additional 1% of green shoe option. On the back of order win, Titagar Rail System can be in focus, where company has secured its first safety and signaling order from the Indian Railway valued at rupees 273 crore. Antony Waste, another stock, can be in focus, where company's subsidiary AG Enviro Infra Project has secured a 7 years contract from the BMC worth rupees approximately 1,330 crore. Paytm can be in focus, where company subsidiary Paytm Payment Service Limited has received integrated authorization from the RBI to operate as a payment aggregator for both offline and cross-border transaction. And lastly, GMR Power and Urban Infra Limited can be in focus, where board has approved a total capital raise of rupees 1,200 crore through a preferential allotment of equity shares and convertible warrants. So back of this, GMR can be in focus.
All right, so lots of stocks to track today. Thank you, Ravinder, for that list. But that's not all. Several other stocks that are going to be in focus today. And let's start by talking about HCL Tech, which has been chosen as a strategic partner by ASN Bank, which is the fourth largest retail bank in Netherlands. This is to modernize and standardize IT architecture for them. So yes, positive news flow here for HCL Tech. Next up, from the power space, we have NTPC. Now, NTPC is a step-down subsidiary. They've operationalized. They have declared commercial operations for 37.92 megawatt of solar capacity at the Khavra project, Khavra plant in Gujarat. So yes, big capacity update over there. And now with that, with this additional capacity, the total commercial capacity of the NTPC group as a whole, that has come to 85.5 gigawatts. So yes, big development over there. NTPC is going to be in focus on the back of that. Next up, let's talk about Bajaj Electrical. Now, this one has announced its foray into solar solutions, which is going to be a new line of business under its existing lighting solutions segment. So yes, Bajaj Electrical is entering a new segment. We'll watch for how the market reacts to this development. Another one from the solar space, MV Photovoltaic. Now, its arm has received possession certificate for 100 acres from KIDB for 6 gigawatt of integrated solar facility in Bengaluru. So, we'll watch out for how the stock reacts to this development as well. Next up, let's put the spotlight on Cyient. Now, Cyient has signed a definitive agreement. This is to acquire over 65% stake in Kinetic Tech for consideration of up to $93 million. So yes, that's the latest on Cyient, and we'll watch out for how the stock reacts to this development. And lastly, there is Fujiyama Power and Euro Pratik sales. Both of these new counters, new debutants on the street, and for them, the lock-in period ends today. So yes, we'll wait for how the stock reacts to all of these developments. Lots of stocks to watch out for. We'll wait for how all of them react to these latest developments. All right, then moving on the first day of the 11th India Economic Conclave, policymakers, wealth creators, global influencers, and leading economic voices, all of them shared their views on how India is navigating geoeconomics and becoming a catalyst in global growth. Here are the key highlights from the conclave.
Over the last decade, Times Network India Economic Conclave has redefined the economic discourse in the country. The 2025 edition of India Economic Conclave witnessed policymakers, economists, wealth creators, and global influencers shaping the narrative on how India can navigate geoeconomics by keeping its interests at the core.
In an era when geopolitical tensions can rapidly escalate into economic disruptions, India's readiness and resolve act as a crucial anchor of security and predictability.
Union Finance Minister Nirmala Sitharaman and Times Group MD Vineet Jain lit the lamp to mark the beginning of the 11th edition of the conclave. In her keynote address, Finance Minister Nirmala Sitharaman highlighted how trade is being weaponized via tariffs.
Globally, it is now very clear trade is not fair, it's not free. India can be lectured saying you're very inward looking, you are a tariff king and so on. But tariff has been weaponized. India's intention was never to weaponize tariff. We of course safeguarded our own industries.
Union Minister of Road Transport and Highways Nitin Gadkari lay emphasis on how infrastructure is pivotal to the economic boom in India.
Actually, it is very clear that for the growth of any country, the infrastructure is very important. Water, power, transport and communication. Without developing this infrastructure, we can't get capital investment.
Global economist Geeta Gopinath red flagged the impact of air pollution on the Indian economy.
Looked at the effect of air pollution only, air pollution on premature deaths in India. That number is 1.67 million deaths. That's 18%. 18% of the deaths that happened in 2019 were attributable to air pollution. That is every year. And it's gotten worse since 2019.
The view of India Inc. on how India can benefit from geo-economical volatility was put forth by the Vice Chairman of Bharti Enterprises.
If India has to place itself, which it is doing, the major markets, US, EU, we have to be aligned with them.
Challenges of the IT sector were addressed by top industry voices.
Indian IT industry will weather and in a way embrace the storm. I think they are excited about it. That ultimately AI is probably being seen as a magic bullet, but it takes a little longer.
From the discourse on riding the consumption wave,
To really analyze what would it take to make India the new home furnishing hub, because I think most of the qualities and so on is here, but we need to start with how is the recycled material set up in India. Can we get recycled wood? Can we get recycled metals? Can we get recycled plastic?
to blending the startup ecosystem.
We live in a world, whether it's inward, whether it's more conflict, whether it's change, where cross-border trade has become more complex. But I truly believe that the complexity also creates opportunity, and that's where we will find new markets for Indian products, which traditionally we may not have looked at 2-3 years ago.
Day one of India Economic Conclave truly highlighted conversations that cemented the fact India is catalyzing the global economy.
All right, so those were some key conversations from the India Economic Conclave. Lots more coming up today as well. But for now, time now for a quick break. Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar, and it's time now to take a look at what's happening on the regulatory front. And SEBI has overhauled mutual fund regulations to simplify framework and also strengthen investor protection. The markets regulator replaces the stockbrokers regulations 1992 with simplified stockbrokers regulations 2025. Let's listen in to first what SEBI Chair Tuhin Kanta Pandey had to say about this new regulation at the press conference. And right after that, my colleague Ankur Mishra is here with all the key takeaways from this regulation.
The new SEBI mutual fund regulations is also a comprehensive replacement. It's coming after many years. For nearly 3 decades, it has served as a foundational regulatory architecture, but there have been several amendments, and now we wanted to simplify and consolidate. So, in terms of again, the focus has been on simplification and consolidation, transparency and investor protection, and then we have also taken some important measures in respect of changing the caps, which is on the total expense ratio, bringing clarity on statutory levies, rationalization of brokerage limits, and disclosure of total expense ratio.
Yes, SEBI board has undertaken overhaul of 2 major regulations, including stock brokers regulation as well as mutual fund regulations. In mutual fund regulations, as per the consultation paper, the changes have been made, but most importantly, the BER has been introduced, which is the base expense ratio. Now, this base expense ratio has been introduced to have the transparency in the system, because BER will not include any kind of other charges, including CTT, STT, and the total expense ratio will be sum total of BER and other charges. If you talk about the changes which are there from the consultation paper, one of the change to note for AMCs, whereby for cash transaction, the charge which was supposed to be at 2 bips has been now provided at 6 basis point compared to 12 basis point which was earlier. And similarly for derivative transactions, it has been kept at 2 basis point which was proposed at 1 basis point earlier. Now that leeway has been given as per the submissions which were done by AMCs. Apart from that, the base expense ratio limits has been revised as per AUM, right from 500 crore to more than 50,000 crore. Minimum 10 basis point revision is there as per the slabs. But most importantly, the exit load has been removed of 5%. And SEBI chairman also mentioned these are the expense ratios which are a maximum limit, and brokerages and the houses can offer a lesser expense ratio as per their call. Apart from that, stock brokers regulations overall also happened, whereby the responsibility has been fixed to the exchanges, which was there earlier for the stock brokers, and overall the length has been reduced. But most importantly, the board has also held discussion on the committee submissions. As far as ethics committee is concerned, no decision has been taken so far, because there are certain considerations. The consideration are there whether or not the privacy should come into effect for disclosures, and that may be taken in the next board meeting.
Thank you, Ankur, for taking us through all of those details, very comprehensive details over there. But let's move on and tell you more on the sidelines of the India Economic Conclave. A. Bala Subramanian, the MD and CEO at Aditya Birla Sun Life Mutual Fund, hailed SEBI's recent revision of mutual fund regulations. Let's take a look at what he had to say about the new norms.
What was being proposed during the draft report and what has come out finally, I think it's made it more apt and clear in terms of the impact of the new circular is going to be very, very negligible from the AMC's point of view. On the investor's point of view, of course, they get the benefit of marginal reduction in the expenses. At the same time, also made it very clear in terms of how the charges should be segregated between the statutory obligation that law officers got. There is a lot of confusion, interpretation that what are the expenses we charge, how much is inclusive of taxes, how much is inclusive of service tax, and so on and so forth. That clarity has now come. So the interpretation issue, otherwise we always used to have, and that's something has been completely cleared. There is also, of course, concern about the brokers who have been, of course, stock brokers who have been providing service to the mutual fund money managers by providing various research-related input for money managers to function more efficiently. There was a bit of confusion in terms of cutting down the expenses. That also has now made it in such a manner. It is 6 basis points. Finally, they're agreeing as against 2 basis points as proposed earlier. That, in my view, it's a recognition which I think SEBI is finally displaying through this circular, the importance of mutual fund in terms of channelizing the public savings into the capital market, the importance of various intermediaries that suppose actually the mutual fund industry to perform better, and that's something in the whole ecosystem recognition that SEBI has given to the circular is something very good. And last but not the least, they also now encourage a bit of innovation by allowing money managers to focus on performance-based fund in case they want to launch. They're giving more free hand to money managers to even consider such kind of funds in the mutual fund industry, which is never the case in the past. Therefore, I would say it's one of the most progressive circular that has come in. But I think at the end of the day, everybody will start looking at what's going to be the impact of this in the bottom line. I think as it stands today, on the basis of the cursory calculation that we have now done, it looks like the impact will be very, very negligible, zero to negligible.
So if I ask you in very layman terms, do you feel that there is anything to worry about?
Absolutely no. Absolutely no. I think that made it very, very clear, thanks to the representation that is done by IMP as a body, and also the representation that has been done by various market participants, and also thanks to the SEBI, who is of course looking at everything more deeply to make it more apt and clear from an understanding point of view, and also now taking into account consideration of the industry representation and made it somewhat better than what has put it in the part of the draft report versus the final one. This impact is going to be is zero, I would say.
All right, so that's all about the reformed mutual fund regulations. But time now for a very short break. Don't go anywhere. We'll bring you more action on the other side.